2012 looks set to start off on a positive note. European stock markets have started in positive territory, with the FTSE 100 being called up just around about 100 points. It was unable to sustain fully that rise, markets sort of just coming off a little bit from those highs. But worth reminding that this day last year, markets also had a very positive start. It's a day when we tend to get a fair degree of activity as funds begin to sort of plan for their year ahead. And so this time last year, the FTSE closed up about 114 points, but by the year end had closed down 5%. So it's to say a good start for this year, but we'll see how things turn out over the course of the next few days as to whether this rally is sustainable. One of the determining features about that, I think, will remain Europe and what is happening on the European scene. We will start January with continued meetings between German ministers and French ministers, and whilst in the interim this is just a fairly complicated chart, but really just painting out where the 10-year yields are for a variety of European bond issues. At the top end, this is the Italian 10-year, which is still just hovering around that 7% level. The Spanish has actually performed better recently, and that's despite comments over the weekend suggesting that they are going to miss their target for their deficit reduction programme. Indeed, this year it looks like the debt to GDP ratio will come in north of 8%. Still a number that's coming in less than the UK, but as I say, it looks like the bond market has taken that news reasonably well. It's going with the flow at the moment. One to keep an eye on here is France. Okay, still around 3%, but a little bit of a spike up there, and we're just hearing continued rumours that downgrade is on its way. So one to watch out for, because that could be a sort of timely bit of news if they were to see the loss of that AAA rating. I don't think necessarily it will have much of a negative impact, on the basis it's been so well rumoured and well flagged that when it finally comes, I suspect the markets will probably absorb that. The German 10 years at the moment, that's come in below 2%. So despite that recent blip up at the end of November, around the time of the summit, it has resumed the downward trend, and German money at the moment looks like a reasonable safe haven along with the US. One area that we are starting to see continued developments is on the euro. The currency has been weak, and you'll have read reports over the weekend suggesting that hedge funds were increasing their bets to record levels against the euro. It's been holding around the sort of 130 level against the dollar, and indeed against the pound here we see the euro weakening off. It's now nudging about 120, looked at the other way round. So sterling appreciating against the euro at the moment. So where this leads us for the FTSE, if we take a quick look here at the way that the FTSE has progressed in the last few weeks, we've seen a pretty strong rally through the course of the second half of December, and it's taken us back up towards that sort of top end of the range, 5643 at the moment. So there have been some positive sentiment feed through to the equity market, and likewise a market that I do continue to highlight. It was very much sold off last year. That was the DAX, the German index of leading shares, and so it's the sort of market that when risk comes back on, I suspect the German market has the potential to outperform, and as I see that today, that has proved to be the case, with this market sort of pushing quite sharply ahead. So a lot of these European markets now coming back up towards the top end of a trading range. Question is whether they can break through. So we'll be watching that quite closely over the course of the next few days. Just turning a little bit to stocks, one sector that I want to continue to highlight, we've mentioned it in the last few weeks, is performing very well on a relative basis during the course of 2012 for the pharmaceutical stocks. This is GlaxoSmithKline. This chart stretches over a year, but if you take it back even 2-3 years, you can see that GlaxoSmithKline is moving to highs and breaking through highs at the moment. And another stock that is in that same sector and on our buy list is Sanofi. A lot of the healthcare stocks performing well. That one's just off the top a little bit today, but you can see that the trend is up. Smith and Nephew is another company I would highlight that has performed quite strongly in that sector as well, with potential for takeover rumours. So if you're looking for one sector with relative strength, healthcare I would continue to play to the long side.